of Inflation 2.0. If you've been watching my channel for any length of time, you know that something I am fearing is a repeat of the early 80s, where we appeared to be beating inflation. We started cutting rates a la Arthur Burns. That proved to be a mistake, and that second wave of inflation came back in a nasty way. The early 80s were not a great time. It was a time of suffering, high employment, unemployment, and high inflation. Again, I don't know that this is a certainty. In fact, I don't think it is a certainty, but it does warrant concerning. It does warrant talking about all the components that could come back to bite us. So a couple of things that I am thinking about this morning. Obviously, the tragedy on the East Coast, the hurricane disaster. We are still looking to save people. We are still looking to kind of dig out from that. But undoubtedly, some point in the near future, building will commence. We will start rebuilding our lives, our housing, our communities, our towns, our cities. And something that we have been learning from the uneducated economist is that the lumber industry, specifically lumber mills, have been curtailing production. Now, I don't know if these lumber mills will start back up and start producing because they see what's coming, but I don't think it takes a great leap to imagine lumber getting much more expensive, much quicker as we go from digging out to rebuilding. Something else I have come to realize, thanks to Jay Scott. Jay Scott put out an excellent piece on Facebook yesterday. Something that I don't know or didn't know is along that corridor, there is a commodity that is mined that is very important to the semiconductor industry. Again, I do not pretend to be an expert in this. I am not. But according to Jay Scott, one of the largest mines for pure lithium that goes into our chips, our semiconductors, is underwater, is damaged. And it will take a while to get that back in production. Could we see chip shortages again? I think it was 3 or 4 years ago. We remember all the EVs and all these other things that take chips that couldn't get them. Could we see something similar because of this? Obviously, we also are on day 3 or day 4 of the port strike. According to the leader of the port strike, he is looking to cause damage to the economy. He wants to show that his 50,000 longshoremen are integral in the supply chain, and that if this goes on for more than a couple of weeks, we will undoubtedly start to see shortages and thus could potentially lead to inflation. On top of that, something we have been talking about is this wave of refinancing. We've been talking about homeowner equity sitting at something like $34 or $38 trillion. One of my fears is that rates come down just low enough to really kickstart a refinancing wave, cash out refi. And we once again see asset owners, frankly, living pretty well, where asset renters don't. There's a lot of equity that can be tapped. Even if only 10 or 20% of that 34 trillion is tapped, we are talking trillions and trillions of dollars. Another thing that I am thinking about now is, what about all that money on the sidelines, money market accounts? It has become clear that the Fed has started a rate cutting cycle. Now, we can argue about how fast and how many, but I don't think it's unreasonable to all admit that rates are going lower. Again, the short end, the very short end is going lower. So that will mean for most of us that savings, money markets, and CDs that we have been enjoying at 5% will very likely soon be in the threes and could could go into the twos. My question for you, and the question I ask myself, is when does that money come off the sidelines? Obviously, we were all very happy with 5% risk-free rate of return, but will we be happy with 4.5, 4, 3.5, 3? At some point, this money will come off the sidelines and be put to work. Now, what will that be? Will that be stocks, crypto, housing? I don't know. But it could be another instigator for inflation 2.0. So again, I think there's a lot of things that we need to watch. Oh, one more. How could I forget the Middle East? Obviously, there's a lot of things going on with Israel and Iran and all of that tinderbox. We could see a significant hit to oil, and oil could rip higher if we are not careful. So there are lots of things going on right now that could lead to higher inflation. So again, I don't think it will be one thing. I think it will be a series of things. And this is what I am watching. By no means is this a certainty. I'm not saying it is. I just think it bears watching. Because if you know anything about the early 80s, it was not a good time. If you are young enough to not have experience with that, it probably would do you well to go research the 1981 and 1982 recessions. They were long and they were painful. So again, it's just about being prepared and knowing what's coming. Something else that I'm really starting to feel like an outlier on is mortgage rates. I am hearing a lot of folks talk about mortgage rates falling and falling quickly. I have heard more than one person talk about rates having a 4 handle on it in 2025, which certainly is possible, but I think highly unlikely. I think what a lot of people are suffering is something known as a recency bias. They saw what happened the last couple of years, and they just run that playbook back. What I'm trying to help people realize and understand is I think we are going to go from a yield curve inversion, where the short end was higher than the low end, back to a more traditional market of low end and high end being higher. It should cost you more money to borrow at 10 years than it does at 2 years, as an example. What I think a lot of people don't realize is I think we are going to go into a rather steepening curve. What does that look like? So I think that in 2025, the 2-year could go below 3%. Today, as of this morning when I checked, it was at 3.67. So again, the 2-year can go below 3. But now what about the 10-year? The 10-year today sits at 3.81. I believe it is possible that the 10-year is above 3.7. So again, the front end falls faster than the long end. So what does that mean? What does this mean for mortgages? If the 10-year doesn't get below 3.7 and we add 200 basis points to that, today the spread is 240, I think. We are at best in the high 5s. So again, what I think is in front of us as far as mortgage rates is we are going to be between kind of 5.7 and 6.2 for all of 2025. If you are building a business model that needs 4% mortgages or something with a 4, I think that's a dangerous bet. I do not think mortgage rates are going down because the yield curve is going to steepen, not invert. And then the last thing we need to acknowledge is that if we have any kind of stimulus to housing for demand, it could be a disaster. Jerome Powell came out yesterday and talked about the fact that the real issues behind the housing crisis, the real issues behind the housing market is broken, is not something the Fed can fix. I think that's kind of interesting because the Fed did this. The Fed broke housing. The Fed kept rates too low for too long. The Fed was the largest buyer of mortgage-backed securities for too long. The Fed allowed asset owners to refi into 30-year debt at crazy low rates. Now we have a dead or frozen move-up buyer, and we have no incentive, or it is not profitable to build first-time homebuyer homes. Jerome Powell says, hey, I can't fix housing. It is a supply problem. So if we get any kind of government intervention with free money for entry-level housing, that could be a problem and again lead to inflation. I don't know if you saw this interview, but apparently Stanley Druckenmiller, one of the best stock investors in the world, he was on a interview yesterday or the day before talking about four times in his life, he lost $1 billion in 24 hours. Can you imagine? Can you imagine losing $1 billion in 24 hours? Now, obviously, he is playing with a massive stack. The 1 billion was likely 5, 10, 15% of the portfolio. But the fact that you could lose $1 billion four times and have any hair left would drive me crazy. So pretty interesting. We've got more and more articles about the refi wave or the refi boom kicking into high gear. MBA had talked about a refinancing wave is already 3x or 300% higher than last year and could explode if we get rates below 6%. This is something you and I have been talking about for a while. I do want to let you know about a very fun and entertaining conversation I had with Matt and Dion yesterday. Dion, once again, made me laugh so hard that my stomach hurt. We did a video yesterday talking about, are you a grower or a shower? Now, of course, folks, we are talking about being rich or wealthy, but think about it. With social media and all the things in the flash, we have a lot of people trying to pretend to be wealthy instead of celebrating growing wealth and sacrificing. Go ahead and watch that video. Certainly watch the first couple of minutes where Dion just let out that crazy statement about being a grower or a shower. I thought that was really well. I do want to thank all of you for giving Steadily a shot. Over 100 of you. Over 100 folks went on Steadily and tried to get an insurance quote in the last 24 hours. Right now, it looks like we still have a lot of questions. Some of you got cheaper quotes. Some of you were higher. Some of them were way higher. Some of you got statements back that they don't insure that place or that city or that type. But the good news is it does support all 50 states. It is a solution that seems to be working. Worst case is it's going to prove to be an alternative should you get a cancellation or whatnot. I am happy to say that some of you got insurance quotes that were lower, which obviously made me smile, because if you can get the same coverage for less, that is just more cash flow in your pocket. So it looks like we will continue to talk to the CEO of Steadily at least for the next couple of weeks, where you and I learn more about what they do and they don't do. Let's talk about Costco. I don't know if you saw this, but Costco's been selling gold bars. They've been selling silver. And now, folks, you can go to Costco.com and buy platinum bars. Looks like Costco is selling gold, silver, and platinum now. Yes, you can go buy some platinum. We did have our school accountability group yesterday led by Frank, Old Guy REI. It went for 3 hours. Looks like more and more of you are joining, which is awesome. We have 3 accountability groups. Find the one that fits your schedule and go join it. Wednesdays, Sundays, or Mondays. Certainly there will be that one for you. Topics yesterday. How about talking to a contractor that has cut 500 plus solid core doors? How to do that right. How about understanding the Denny's midnight meetups that the Lumberjack Dion and Mike host during our Vegas event? And again, more and more people are joining, so that is so much fun to see. Dan Bird did do a midweek update. Again, Dan was not with us last week. There was a hurricane, his wife's birthday, all of that. But he did do a midweek update. It will post at 9 a.m. this morning. So for those of you interested in stocks, the Dan Bird midweek update will come this morning. We do have a chief economist, Joe Lavorgna. He is basically calling BS on the job market. He highlights that consumers, you and I, think the job market is horrible. He expects unemployment to go up tomorrow, so we can watch his call. Again, last month was 4.2. Expectations, last time I checked, were 4.2. He is saying it's going to go higher tomorrow, so let's see if Joe's right. And he thinks that the labor market is deteriorating faster because a lot of the unemployment's not being reported because of severance and other things. I do want to congratulate 3 people for joining school yesterday. Again, my intention is to build the #1 real estate investing school to provide crazy value. We had Nick, Axel, and Anthony join yesterday. I do want to let you know that I just got confirmation that we will be doing a school session with PropStream on Tuesday. PropStream is one of those platforms that the great investors use, like Jason Pritchard, Omar, Adrian, and others, to find deals, to find out how much debt is on a property. So we will have the folks at PropStream on inside school answering any and all of your questions about how to use the platform. So that will go live in school 9 a.m. Tuesday. I will book the meeting here shortly and put it on the calendar. So folks, lots and lots of stuff going on. Let's see, anything else? Oh, jobless claims. How could I miss that? It's Thursday. Jobless claims. Last week was 218,000. Estimate was 221,000. Actual came in a tick higher at 225,000. I will wonder, a couple of months ago, we saw some upticks with the hurricane in Texas. I wonder what this nasty, destructive hurricane in the East Coast will do to the unemployment claims we will see in the next couple of weeks. Folks, have an amazing day. Join school, be part of the community, get in the accountability groups, take the boot camps, all of that stuff. It is there for you. Have fun. Take care. Later.